Yeah, it's mindset cafe, we all about that mindset. Gotta stay focused, never settle for less. It's all in your head, how you think you manifest. So get ready to rise, cause we about to be the best. Gotta switch it up, gotta break the old habits. Get your mind right, turn your dreams into habits. No negative vibes, only positive.
What's up, guys? Welcome to another episode of the Mindset Cafe podcast. It's your boy, Devin, as always. And today we actually got a special guest for you. We have the money man. We got my boy, Craig Peterson. He is a good friend of mine. You know, we're in a networking group together, and actually we'll be working together on, you know, the financials and all that kind of stuff. But I wanted to bring him on today because there's a lot of things that go on with money, right? From mindset to just general knowledge. So I think today's episode, if you guys have any curiosity about how to make your pennies into dollars, definitely tune in. So, hey, man, thanks so much for coming on and taking the time out of your day.
Hey, it's a pleasure, man. I'm honored to be on this platform, and I'm just excited to chop it up with you.
Oh, no, definitely. I know we're on different time zones and everything like that. So your day's already been going, you know, for a while. But what got you started in, let's go here. What got you started in the financial space, right?
Yeah, no. And you know, it's funny because a lot of people don't know I'm an engineer by trade. So I had no intentions on getting into the money industry or the financial industry as a whole. And after I got into the engineering world, I quickly realized that it wasn't for me whatsoever. You know, I was good at math, still am, but just didn't enjoy the day-to-day work and where I could see myself going down that path. And you know, I've always kind of invested in myself and as well as my money from an early age when I was in high school, starting some investment accounts. So it always intrigued me. And after I started to get to talk to a couple of different advisors and one that I worked with before I got into the industry, I started to chip away and really had some time to think about, well, what do I truly want out of life, and what makes me want to go, and what do I want to be doing more of, what do I want to be doing less of, and it kind of led me to the path without even realizing it. That hey, this is an industry that you could do really well in, but also you can do right by people as well. And I thought, what's the worst that can happen? I have that degree. I can always go back. But just kind of went full fledged, and I truly didn't have a lot of support whatsoever on that decision. It was a lot of shock to a lot of people in my family and friends and coworkers. But here we are today, and I absolutely have no regrets.
No, that's awesome. So what was your first investment? Like, how did you get into that world? Was it, you bought a stock? Like, what gave you that itch or that bug?
Yeah, I opened up an investment account by myself to start with. And I had no idea what I was doing, but just, watching YouTube videos and trying to read a lot of articles and just pick people's brains that were older than me. I started to learn more and more about it. Obviously, had still little knowledge and lost some money, gained some money, but I kind of looked at it as a game and made me want to get better and really just understand, hey, how do we actually truly look at the financials of companies before investing in them? Or, what are some of the objectives of this investment? What do we want this money to do? So I started to kind of tick on that end. And I'm very analytical as a whole. And that the data aligned with, who I was as a person and just what I enjoyed looking at and doing.
So no, that's awesome. And I mean, as a company and running a company, like the financials, whether it's, let's say you started a company because it's just a passion or even it's a side hustle and all those kind of things, at the end of the day, it is a business and you need to know how to make you money, as well as how to basically protect your money. But also on a personal side, I know we've had discussions and, we're going to be working together even on like the personal level, for different investments and, be your own bank and all that kind of stuff, where there's so many different internet like gurus and stuff that there's so much like misdirection knowledge. So I think it's awesome that, you've not only had that kind of a passion for it and it sparked your interest, but you actually are someone that I know is like trustworthy. And if you don't know something, you basically go, hey man, like, I don't know this. Let me look into it and I'll get back to you, which is huge, especially as an entrepreneur in any space. I mean, that's how I train my team. Like, if you don't know an answer to a member's question on muscle groups and stuff like that, like, don't make up a bullshit answer, because if they find out the real answer, then you're going to look like an idiot and they're never going to trust you again. Right. So I think, I mean, that's what's kind of aligned me with you as well, is every time we talk, it's always like a genuine conversation. And if it's something that's outside of your current scope of knowledge, you're like, look, let me do a little investigating and then we'll talk again. Right. So let's dive into the separation, right? You know, there's the business side and then there's the personal side. Starting off on the personal side, what is the biggest problem you see with, you know, your clients or with people in general in just managing their money?
Yeah, it's definitely different generations. You see different aspects, and you know, both of our generation, because we're in the same generation, is guilty of it. And what you said earlier on, which I almost laughed at, is it's because of the internet. Frankly, we want everything now, and you know, half the internet or more than half the internet, you know, is fake. You know, you got to be very careful, especially when it starts coming to the financial side, even the exercise industry and the fitness industry as a whole. You got to be careful of who's giving you that information and doing some understanding what their background is. You know, have they been in the industry for long? Do they have an underlying condition of wanting to sell something to you? Because that's something we run into across the board, and frankly why we've started our company and how we approach, you know, when it comes to planning. We do a lot of things that are against the grain in the financial industry as a whole. So getting back to your question though, is people are looking at TikTok for their financial information. People are looking at Instagram for their financial information. And there are some good sources, but again, going back to understanding, okay, tell me a little bit more about this person. How long have they been doing this for? What are they selling, if anything? If it's a course, then, you know, that's a red flag right there. But just having an understanding of going into your wealth building journey, it's kind of like physical fitness, for example. I compare everything to fitness because I have a passion for it myself, just like you. You're not going to grow a muscle and have 20-inch biceps in a month or in 6 months. You're not going to get a six-pack in a couple of months. You're not going to be able to bench 315 by 20 in a year. It takes time. And going into it with an understanding that wealth building is going to be the very same aspect, where it's going to take a lot of time, and that's one of the greatest assets you can have in a younger generation. But then having to do due diligence to continue to be consistent with the plan, regardless of the situation. You know, I always tell people, I'd rather have you invest $25 a month than $1,000 a month if you're not going to do that on a monthly basis. And so just having you know, your expectations set at a certain level, I think, is probably the biggest thing on the personal side of just managing money. But people also don't know where their money's going. You know, keeping a simple Excel budget sheet that you look at once a month could be something that massively changes your aspect of how you look at money, and where that goes. You have to also understand what kind of person you are when it's correlated to money. You know, do you like materialistic things? Maybe put some rules behind it, but that all aligns to what are your goals, because you're always giving and taking. So you have to understand, you know, if my goals are to get to X amount of net worth, well, I need to do these action items, and probably buying, you know, the newest, latest car or the newest, latest material things. Nothing wrong with that by any means, but is that helping you get to your goal, or are you getting further away from your goal? So I think that's a major aspect that I see, where we just don't understand where we're even starting or where the money's going. It's leaving before even, you know, it hits the bank account, for example. A great book that I always encourage everybody to read is The Richest Man in Babylon. And that teaches, it's such an easy book to read, but it's the principles of just how to manage money, and still stays true to this day, which is a different aspect, and, you know, a quick, easy read for anybody to read.
No, I've read that book probably I will be honest, I listened to the audiobook, but, you know, I've listened to it probably 2 or 3 times over the course of my whole entrepreneurial journey, because it's one of those ones where you take out some key knowledge the second time and some things you missed the third time, because there's so much information and like subliminal information as well. So that is a great book. I do suggest that as well. But I think something that's awesome that you said was that it takes time, it takes consistency, just like working out, right? Just like if someone comes into the gym and they're overweight, you didn't gain the body that you currently have in a year. So you can't realistically go from, let's say, 400 pounds to 150 pounds in a year. Like, Rome wasn't built in a day. Your dream body is not going to be built in a day, but you're also not going to save yourself from financial ruin in a day, right? It takes time digging yourself out of the hole, just like you dug yourself into the hole, right? And it all comes from, like you said, consistency. And it has to be something where you're not just doing, like, again, relating it to fitness, because, you know, we both have a love for it. You can't, let's say, all of a sudden invest $1,000 a month if you can't afford that. That's like trying to do a crash diet, right? It's not going to last. You have to do something that is, it might be a little uncomfortable, but something that is feasible and that you can consistently stick to it, you know, rain or shine, right? Would you agree with that?
Oh, 1,000%. As the comment that I was mentioning earlier, yeah, start small, knowing that you can always add, because
Right.
it's pointless if you're going to be inconsistent with a certain dollar amount that's higher and maybe even scary for you, but you're thinking, no, this is good for me. This is what I need to do for my future. But it's actually doing a disservice to you if you're doing it sporadically, rather than we do a little bit less, but we know it's going to be hitting every single month. Well, again, going back to the time thing, what in the investing world and in the financial world, we call that the compounding effect. You let that build up over time, you start to see a hockey stick approach down the road.
Explain. So first off, John Crawl from our group, he said that Craig is the man with the fire emoji. But so explain.
My guy, John.
I love the hockey stick analogy. Actually, you know, can you explain that for the people that are listening in and aren't, you know, seeing you right now?
Yeah, no, this goes with anything. This can go with your fitness journey. This can go with your investing journey. This can go with your business journey. But you probably have heard the term hockey stick growth, or whatever the case may be. And how it gets its name is because it is shaped like the end of a hockey stick. And, you know, over a period of time, you know, first 5, 10, even 15 years, you feel like you're barely growing at all. You know, with your business, you're putting in the time, you're doing the right things, but you're not seeing, you know, the numbers you want to see or the growth you want to see. And same thing with the investing. So where it gets in the investing world is, hey, I'm investing $25, $1,000, $5,000 a month into my account, and it's just slowly growing. Why am I not seeing massive amounts of growth? But at some point in time, all of that money you've put in over the years is starting to compound on itself.
Right.
And so as it invests and grows more and more, well, the dollars start to grow more and more, and it takes less effort. And all of a sudden, at some point in time, depending on where things are at, it starts to accelerate substantially. And that's from over all of the years you've put in, again, going back to fitness, business, or the financial world, and you see exponential amount of growth. And so that's where the consistency is so important with anything that you do, because of what that can lead to when you let time do the rest.
Right. No, exactly. Yeah. No, the hockey stick, for the people that are listening in, like, picture a hockey stick laying down, like the long side where you hold is basically on the ground. Right. So the way I like to explain it is, like, imagine if it's on a slight incline so that you see little growth and it's pretty steady, and you're like, man, like, this growth is pretty much not a plateau, but it's so slow. And then all of a sudden, just like your fitness, where all of a sudden everything starts to align, your hormones are aligned, your metabolism is now spiking, and you're all of a sudden just rocking and rolling. Just like the investments, all of a sudden that slow incline all of a sudden just hits a point, and it just shoots straight up, just like that basically end of the hockey stick where you hit the puck. It just spikes and curves right up, and all of a sudden you're like, oh wow, right? And everyone's hockey stick is different, right? You know, it's in that it comes down to what your goal is, what your consistency is, what your input is. But, someone, it might be a year, it might be 2 years, it might be a month, it might be 5 or 10 years, right? So you can't judge you can't compare sticks, right? So,
Right.
but it's so true, right? Like that is one of the truest analogies it's a universal analogy for pretty much anything in life, right? You want to build trust. Well, trust is slowly built. And then all of a sudden something happens, an event happens, a tragedy happens. And all of a sudden, you can rely on who you can rely on immediately, right? So it can go into anything. So let's go into, the other side of your business. Like with business owners, what is the most common problem or what is the most common issue you see with business owners and their financials, or business owners and them wanting to grow their financials and not knowing what to do?
Yeah, so there's a couple things that typically will stick out, and one of the first things is we try to separate and understand, your personal side of your finances versus your business side of your financials. They typically align together, or the business owners will align them together and saying, I'm doing great personally because the business is doing great, or vice versa. And we need to make a plan for the business and the personal side, because they are separate, especially if you want to eventually exit your business, or kind of get out of it to a certain degree, whatever the case may look like. We need to understand that they are two different separate categories. So really aligning with that is something that we look at quite a bit right off the bat. And then something else that we like to look at is understanding kind of the 500-foot view is how I look at this. And what happens as you get older and life progresses and your business progresses and grows is you start to get stretched thinner and thinner in a lot of areas. And typically what we see is that business owners are doing probably way more than they should be in certain areas. They shouldn't be paying attention to some of the things that they are still doing. And that's actually hindering them from their financial growth or their business growth or wealth accumulation, whatever the case is. And we really try to fine tune and understand, okay, what do they truly want to be great at? What areas do they want to be doing more of? And then what areas do they want to be taking away of? And then identifying those areas, either delegating them or completely stopping them, and then taking away areas that they have no idea about, typically on the financial side, and really honing in, trying to grow that aspect. So they really just don't understand, hey, I have all these things going on, but I may not have a plan around that. I'm just doing it to do it. Or I have a million things on and I think I'm doing great, but actually, if we were to hone in a little bit more on certain areas for you on the financial side, but also for you as the business owner, what are you great at? What are your superpowers? Have you lean into that more? You're going to see major growth on the business side and then the financial side too, once we have a clear vision of what we want in the future, whether it's 5, 10, or 15 years down the road. So just having us be the accountability partner almost, if you will, but also compiling all the stuff that's going on, organizing it nicely, and then having a clear picture of, okay, this is what we're focused on for the next 5 years, 10 years, whatever the case is.
So what you mentioned something when you're talking about that, and you said that, some business owners over focus or hyper focus on something that hinders their business, or their business financials. What is something typically that a business owner shouldn't necessarily pay so much attention or micro, detail attention to that could be hindering their business?
So it depends on the business. But again, going back to the point of understanding, if I'm not the one to be in the financial aspect of looking at the financials, should I be looking at maybe a CFO or a fractional CFO, or just having somebody come in and consult and understand, hey, where could we be going wrong? Where could we be doing better at? Because they're the experts. I believe in surrounding yourself with, I call them the board of directors, putting the right people at the table, knowing where you sit, and then surrounding yourself with all the other experts. Something that kills a lot of businesses that I don't think are paying close attention to enough or talking about it enough, and it's the biggest expense for me, for you, for our businesses, is taxes.
Mm-hmm.
How are we properly approaching taxes and taking a proactive approach rather than a reactive approach, which is typical in the business owner world, no fault of their own. It's typically, oh, I should be writing this off, or it's the end of the year. Do I need to buy any equipment? Rather than having a plan, and because tax planning is a yearly thing, it's not once a year. It's an ongoing, kind of like physical fitness, an ongoing thing that we need to continue to pay attention to. But are we looking at our books on a monthly basis? Are we making adjustments maybe on a quarterly basis? How often are we talking to our tax specialists or CPA? Things like that can drastically change us saving money, but also taking the amount of risk that we need to be taking at certain periods of time throughout the year for a business, where now it's a little bit more tactical on, hey, we're looking to grow in this area. This quarter is going to be a great time to do that. And here's why. Rather than, again, going to the reactive where we have to do this, let's just push forward and do that.
No, I definitely agree with you on that. I mean, in the beginning of a business, or in the beginning of your business or your entrepreneurial journey, you have to wear a bunch of hats, right? And I think that holds a lot of people back, because when you do have to hire, or when you should at least hire someone else, you don't even think about like, okay, well, what hats should I replace with someone that could do it better than me? And, or not even, let's say, an employee, but what things can you outsource, like your financials, like a part-time CFO, right? Or a COO if you don't have one, right? Like if you're a visionary, like your next person you should probably bring in should probably be someone that's more of an integrator that can kind of hone your visions down and tighten them down so that they can make it a reality. Because as a visionary, like, believe me, like the mind just goes everywhere. It's like you need a rock to kind of hold you in place as well. But I definitely agree with you. Like you gotta bring in professionals, and they don't have to be officially like a board of directors, but you should have your board of directors in terms of resources that you're going to. I mean, from a bookkeeper, if you need a bookkeeper, from, a CPA or a financial advisor, like yourself, or someone, like even for us launching the franchise, like I brought in a franchise advisor that I have to, all of a sudden I'll have a question, or, I'll want to bounce an idea off, and I'll shoot him a text or give him a call, but he's not a part of the company necessarily. Right. And I hired him because I know he's a professional, because he's walked the walk. Right. Like he had his own franchise. He got it, built it up and sold it and everything. So it's like, I don't know everything. Right. I know I'm not the best at every single thing. And just like Bill Gates said, like he doesn't want to be the smartest person in the room. Right. Like he is not the smartest person in the room. That's why he hires everyone. Right. So it's one of those things where you got to realize that you may not think people are going to do it better than you, or care about your money as much as you. But if you don't know especially, let's say, taxes, all the tax breaks and different, strategies to save your money, realistically, you're actually losing money and you're hurting yourself by not bringing in people. Right. But on a side note, I want to see what you think about this, because when you're talking about taxes, it reminded me of this. I saw two different videos, and it got me thinking. So the first one being, back in the day when America was founded, right? We cut ties with, England and everything because of taxes. And now, I mean, I don't know about you, but California's taxes are crazy, right? And it's like, damn, isn't it crazy to think that we basically had this whole war and basically cut ties and want to do this because we didn't want to get taxed. And now essentially they're doing the same thing to us. But then the other thing that I started cracking up was, I saw another video was like, 4th of July, we pay taxes on fireworks to celebrate the day that we stopped paying taxes. So it was just like one of those little random things that, like, it made me laugh. I know, like, from a financial standpoint and from like dealing with people's taxes and all kinds of stuff that you'd appreciate. But it was just one of those things you're just like, it makes you think like, damn, times have changed.
Yeah, isn't it ironic? We're celebrating our freedom, and then we feel like we're being slaves to the tax system to a certain degree.
Oh, 100%.
So I want to go back before I forget, and then I'll touch on that too. What it comes down to, like you said, whether you don't have to have a board of directors. So when I quote unquote say board of directors, they could be external, just contractors, for example, or just bring in for a certain period of time, like you did with that advisor. Which is great, because think about all the time that you've saved, years that you could have made mistakes because you paid a couple bucks and now have gained all that knowledge, but then you've collapsed time to a certain degree
Yep.
as well, where that maybe, in 5 years, it would have taken you 10 years to get to where you'll be in 5 years. You just collapsed that time. So that's super critical, but that comes down to being aware of what you're good at, where you need help in, and then, letting the ego down as well. You can't be the jack of all trades. Otherwise, you're just average. And what we always
Yep.
tell our clients too is, we don't believe in being mediocre or average. We believe in being great. And so that's where we want you to be great in, but we also want to be great in the areas that we know we're great in. And if we're not great in, we're going to bring somebody else into the table. Kind of like what we're talking about. We bring in contractors or, our strategic partners to come into the mix and make sure that we're in line with what we're doing. So I wanted to hit on that because I think it's super important for the audience to understand that there's a lot of knowledge out there, and it doesn't have to be official hire. It's just knowing where to ask, where to go, and being okay with doing that. But to the tax point too, it is ironic. It's funny. I believe in paying taxes, but I also don't agree with mismanaging our money and where it may be going, where it may not be going. And I do think that we don't need to have them as high as we possibly do right now, especially in your favorite state, California. So that's where we come in. We want to make sure we can take back some of what is ours and put it back into the business or back in your pockets, whatever that may look like.
No, I definitely, I agree with paying taxes. I'm not saying it should be tax free, but it's one of those things where it gets you thinking as a business owner, especially because like as an employee, you may not see it, but let's say someone pays for your service, or let's say someone buys something, right? Someone buys something, you pay a sales tax, right? And then I collect the sales tax, so which I pay that to the government. But now the employee that is working that sold you the product, we also pay their employment tax, right? And then at the end of the year, even now in California, it's or in LA, it's quarterly, but you have to pay your business, your city tax quarterly, and then you get hit with your federal tax and stuff like that. And then you get hit with your personal tax. And it's, if you think about it, it's like, and then the money I spend that I just paid all this tax on, I spend and I pay a sales tax. It's like realistically the dollar isn't necessarily a dollar. So it's a game, right? You got to know how to play the game, right? So if you really think about it like that, like if a dollar is a dollar and all these things you're paying taxes on and stuff like that, it's like, okay, well, how far can $1 really realistically go before it's zero because of taxes? But again, if you know how to play the game and look at money as a game, just like business is a game, and you bring on people like yourself that know the game better than you do, then you will be an expert player because of your team, not because of you. Like you said, you don't need to be a jack of all trades. The real saying is, a jack of all trades is a master at none, right? So it's like one of those things where like you have to have the humility to reach out and bring someone on, and it's not always bringing on let's say a COO, right? Or bringing on someone like that. Like you can bring basically a contractor or just an advisor or someone that you hire them for their services. They have their own business, such as yourself, that you're paying them for their service and you're not putting them on payroll and all those kind of things. But I agree with what you said. Like I value time, right? And when people hear that, especially on social media, they think, oh, you just want to be kicking your feet up and drinking a Corona on the beach. And no, it's like, I value the time someone else has spent doing something and learned all the what not to do's and what to do's so that I don't have to do that same process. And now, like you said, condensing 10 years to 5 years, you condense 5 years to 1 year, like all those kind of things. I value the time you spent so I don't have to spend that same amount of time and I can grow faster. Right. So I agree with you 1000% on that. Before we wrap up, because I know we are on a little bit of a time schedule too. I want to ask this question because I don't want it to get left out. Let's say, hypothetically speaking, right? Hypothetically speaking, everything that you've created, everything that, your company has created is basically erased from this earth. There is a legacy wall. On the legacy wall, it says Craig Peterson, and then it has your message for the world. What is your message?
That's a really good question. $1 million question, I think. I would say, because right now I've kind of been driven into a mission of mine, and it's kind of twofold. Number one, it's to change the financial industry and be a disruptor, hands down. Um, and then number two, it's emphasizing excellence in regardless of whatever I do, whether it's hanging out with my fiance and being an excellent fiance, whether it's being an excellent business owner, whether it's being an excellent you know dog owner, whether it's being an excellent future father, whatever the case is, but just giving 110% at anything I do, I think is even more important than the financial aspect. And that's definitely something that I'm striving towards and, want to be known as. And there's always room for improvement. So that will be an ongoing journey.
No, that's definitely awesome. And I think that's why we align so much is, with what you're doing with the financial industry and transparent financial solutions, and what we're doing with Strive 11, trying to be those disruptors, our personalities just definitely kind of align. But I want to make sure I didn't get that left out. But I do want to ask, flipping it back to the personal side of investing and finances, if someone is working on or wants to work on basically figuring out their financials, right, and wants to figure out where should they start investing, or should they be focusing on something else, how does one start looking at their financials? Right, just like the ABCs of basically knowing what your financial position is.
Yeah, no, great question. I'll throw out the disclaimer. So make sure we're all safe here. This is not financial advice. I'm not a tax specialist or expert by any means either. So definitely check with your financial advisor and CPA. But if it were me, the first thing I would probably look at is my cash flow. And understand how much money's coming in and how much money's going out. And understanding where that money's going to is really important. And am I positive or am I negative? That's going to be your first objective then, to understand, hey, do I need some work, and do I need to look at where my money's going? Am I spending too much in certain areas to free up cash flow, or do I want to even, free up more cash flow? If, let's say we have $1,000 of excess cash flow, great, we're in good terms now. Now you can understand, what should I properly do with that $1,000 on a monthly basis, whatever that looks like. In the investing world, I would definitely do a lot of research. Look at a lot of reputable brands or reputable companies or reputable articles, and just start to understand, hey, what should I be looking for if you want to do it on your own? If you don't want to do it on your own, then I would probably seek out some professional advice. And then that goes back to our conversation from the beginning, where delegation, you don't want to spend a lot of time and energy, because it does take a lot of time and energy to understand where your money should be going and what it's going to be doing. And the stock market is very quick moving. It moves relatively fast. So, if you're in things that you shouldn't be in, well, you could lose all that money in an instant. So just doing your research, if you are planning on doing it yourself, asking for guidance from either mentors, friends, family, or again, just reaching out to good sources and professionals, and then making that decision on, hey, am I going to be investing in the stock market? Is that for me? Or is real estate something that I'm interested in and I want to dive deeper into that? Again, finding your community and then honing in on that, because it doesn't have to be all the stock market. You can make wealth and create wealth in a lot of aspects, and we believe in that too. And we want you to go in that direction or wherever you decide to. So there's a lot of ways to make money, but just understanding what's right for you, and then either becoming the expert in that or finding experts that have already done it, to your point, and leaning into them and relying on them to take advantage of that. But the last thing I would say is start small. Start with something that is doable for you. Don't stretch yourself too thin that you're eating ramen every single night, but be consistent with it regardless of what it is. Consistency is going to trump any other source or tactic long term, and we do long term investing, and so we believe in consistency, and it's been having a proven track record.
No, that's awesome. And where can people connect with you and learn more about transparent financial solutions?
Yeah, absolutely. So you can go to transparentfs.com. to find us. Also, you can just email us any questions you have or inquiries at info@transparentfs.com. And then, my personal Instagram handle is Craig_P20. And those are probably the best 3 ways to connect with us.
Perfect. And I'll definitely put all that information in the show notes. Guys, if you do have questions on your personal or on your business, financials, Craig is the money man. I'm telling you, like, I'm working with him, and I don't recommend people that I don't also believe in. And that's what the Mindset Cafe is all about, is bringing like-minded people and people that are going to better each other on their journeys, both from a mindset standpoint and in any area of life realistically, right? Because this is a money mindset kind of conversation, and you have to have a certain kind of mindset and a certain kind of perspective around your money and where you want it to be. So if you know someone else that is interested in learning more about their financials, or if you think someone's messing up their financials and should listen in on this episode, make sure you guys share this with them, share it with a friend. Make sure you guys leave that review. And like always, we appreciate y'all. We love y'all. And we'll see you guys on the next one. Thank you, Craig, for coming on.
Appreciate you, brother.
No negative vibes, only positive thoughts. Just in the game of life, mindset causes shots. Got my mind on the prize, I can't be distracted. I stay on my grind, no time to be slacking. I hustle harder, I go